The following is not financial advice and is intended for entertainment purposes only. Everyone is looking for the best way to make money from the AI boom. Should I buy Nvidia, Microsoft, or Google? But they're all missing the bigger picture. By the end of this video, you'll understand why AI is going to collapse the financial system and why Bitcoin is the single best way to profit and survive from AI. Let's take a look. It's no secret that AI is beginning to impact the jobs market. Recently, a top Fortune 50 company replaced all of its human translators with AI because it was faster, cheaper, and basically free. More and more, stores are cutting human cashier jobs as they shift to auto-scan, tap-and-go checkout, not to mention the impending driverless cars industry. These automations will remove millions of salaries worldwide. Our economy, however, runs on debt. Mortgages, car loans, credit cards, and student loans all assume that the paycheck keeps coming. When AI cuts paychecks, more people miss their payments. Those missed payments mean losses for banks. To plug the hole and raise cash, banks do two things. They stop buying new assets and they sell what's easiest to sell, their safest holdings, which are government bonds, treasuries. When lots of banks sell treasuries at once, the price of those bonds falls and their yields, i.e. the government's borrowing cost, goes up. Now the government has to refinance and borrow more at even higher interest, right when the economy is weakening and tax revenues are shrinking, so its interest bill goes up while its income comes down. At the same time, a stressed banking system often needs official support, deposit guarantees, emergency lending, or outright bailouts. That's extra government or central bank backing, more spending, more guarantees, just as borrowing costs are rising. A debt-heavy system and widespread job disruption do not mix. Policymakers have a choice. They can either let defaults snowball and watch banks fail and the system collapse, or push pain onto savers by forcing interest rates lower than inflation and creating new money to keep credit markets from breaking. Whatever label they use, stimulus, facilities, market support, the effect is the same. Money printer goes brr, and your money buys less and less. The government needs long-term bonds to pay less than inflation. If prices rise faster than your bond's interest, your money buys less. For example, if prices go up 7%, but your bond pays 4%, you're still 3% worse off in buying power. Compound that over 10 or 30 years, and you can see why government bonds aren't an attractive investment anymore. That's why scarce real assets like gold and especially Bitcoin are going to massively outperform bonds in the coming years. But in the age of AI, Bitcoin in particular is going to shine. Back in the dot-com era, companies built tons of fiber optic cable. Even when many of those companies went bust, the cables stayed in the ground and were useful for decades. That investment kept paying off. AI isn't like that. The stuff you need, top-tier chips, GPUs, and server racks, goes out of date very quickly. So if you want to stay competitive, you have to keep buying new hardware over and over. The biggest cloud companies, hyperscalers, are stuck on this treadmill of chasing the newest hardware, and they're also locked in an arms race with heavily backed rivals including Chinese state-supported players. When that much spending is concentrated in a few giants, governments won't let them fail. If growth stalls or the cycle turns, expect too big to fail treatment, special support, guarantees, and other safety nets. Big AI needs lots of electricity. When several new data centers plug into the same area, they strain the local grid. Until the grid is upgraded, which takes years, power gets tighter and more expensive. So homes and small businesses in those regions see higher bills. Higher energy-driven inflation puts policymakers in a bind. If they raise interest rates enough to kill inflation, a debt-heavy economy can crack. So they often do the opposite, keep interest rates below inflation and add more money and more liquidity to stop things from breaking. Okay, so finally to the answer of why Bitcoin is the single best way to survive the collapse. When the big print comes, things that you can't print, like gold and Bitcoin, hold value better than cash. Both will benefit, but Bitcoin is the fastest horse in the race. Bitcoin wins on scarcity, custody, verification, portability, and network effects. Bitcoin is absolutely scarce. There are 8.1 billion people on the planet, but there will only ever be 21 million Bitcoins. Approximately 212,000 tons of gold exist above ground, and the world has an estimated 54,000 tons of gold in known underground reserves, with potentially millions of tons more in deep sea deposits, not to mention trillions of tons in gold in asteroids. Fiat is designed to lose purchasing power, and Bitcoin will appreciate because of this. So you spend the dirty fiat and save the pristine Bitcoin. That's not a bug, it's phase one: reserve asset and store of value first. Payments follow as the network and rails mature. Bitcoin lives outside of the bailout system. Bank deposits and bonds sit inside the system that gets rescued and diluted when crises hit. Self-custodied Bitcoin is the asset itself, not a bank's promise. Self-custody removes you from the collapsing system. I'll say that again because it's a really important point. Self-custody removes you from the collapsing system. Gold's market is riddled with paper gold, claims that may not be fully backed. These IOUs can distort the price. Bitcoin is verifiable at home. Run your own node and you independently check every block and transaction. Yes, there is paper Bitcoin in the form of ETFs, but Bitcoin is much easier to custody than gold, and the trend in concentration is towards less concentration over time, unlike fiat money, which is trending towards higher concentrations of wealth at the top. Gold is heavy, slow, and storage dependent. Bitcoin is a bearer asset you can move worldwide in minutes, 24/7, without asking permission. Every new Bitcoin user strengthens liquidity and security. The more decentralized and secure the network is, the more value in the asset. This is known as Metcalfe's law and is one of the reasons for the power law model that predicts a price of 1 million per Bitcoin between 2028 and 2032. Ultimately, Bitcoin is scarcer than gold. It's outside the collapsing fiat system, it's easier to verify, easier to self-custody, and vastly more portable. As adoption compounds, those advantages stack, making Bitcoin the superior monetary asset in every way. Finally, let's compare Bitcoin to the stock market. All companies are ripe for destruction with AI. No company is safe in the long run. Though some, like Nvidia or Google, may be safer than others, it's highly unlikely that they will outperform Bitcoin in the next 10 years, unless they start stacking sats like the other Bitcoin treasury companies. Macro analyst and investor Jordi Visser says, Bitcoin is a belief. Beliefs last longer than ideas. There are no companies in the S&P 500 from 100 BC. Gold has been around since then. Bitcoin will be around for a long, long time. It's a belief at this point, and people can fight it, but it's going to be around. I think you want to start shorting ideas and you want to be long beliefs. This is why Bitcoin is hands down the single best way to survive the fiat money collapse and profit from the AI boom. There is nothing that competes with the king. So what should we watch out for as the story unfolds? Watch the unemployment rate and hiring rates. Watch for surging data center build-out, rising local electricity bills, because AI needs enormous energy. Watch for loan delinquencies climbing, even when headline job numbers look fine, because cracks show up in payments first. Watch the share of Bitcoin held in ETFs and exchanges versus self-custody, because growing self-custody is a healthy sign of real Bitcoin adoption. So, to recap, AI is killing wages, causing loan delinquencies which end up on the bank's balance sheets, forcing them to sell government bonds, pushing up the cost of borrowing for governments at the exact time that governments need to borrow exponentially more, further worsening the problem. In a leveraged debt-based system, this leads to money printing so massive that it will make 2008 and COVID looks like child's play. Long bonds will slowly bleed you dry. Gold is basically a seatbelt, but Bitcoin is a rocket filled with premium NASA-grade kerosene, finite, self-custodied, and outside the bailout. As the fiat system slowly collapses in on itself, Bitcoin will be making generational wealth for those that got in early and allowing you to thrive in the age of AI. If you enjoyed this, thanks for watching. Don't forget to like and subscribe. See you in the next one.